Well, let's move on now to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity you're looking at today?
Sonia, I'm looking at the crude oil prices and they really seem to be getting stuck in a range now. We haven't seen a breach of 90 on the lower side or 100 on the higher side for that matter. It really has been trading within that $91 to $98 per barrel mark. The overnight markets have seen a 3% of a decline in crude oil prices, and this is after the OPEC monthly demand report came in yesterday, which says that they are looking at 2.5 million barrels of a demand growth in this current year, and this is a fifth straight month where they have actually cut down on demand growth estimates there. This is the OPEC output, or what we have seen in the last couple of quarters there. The first quarter, OPEC says there was a deficit in the global markets by real little there. But then second quarter and third quarter have seen a surplus, and they are anticipating a surplus in crude oil in sense of supply in the fourth quarter as well, and is the reason they are talking about further output cuts. For the month of October, the OPEC output was 2.1 million barrels per day, less than the agreed quota. They have decided to cut 2 million barrels per day of quota from the month of November itself. That is something that they already have in sense of cuts. So it would be important and interesting to see on what kind of output cuts we actually see for the month of November there. OPEC also has said that it is about high inflation, rising interest rates, chain disruptions, and of course, rising COVID cases in China that have continued to weigh onto the crude demand there. Even as China has taken back some of the restrictions that they put out on COVID, but the fact being that the COVID numbers in China have continued to be near record highs. All the economic data that we have seen coming from China has continued to see a decline, including the GDP at 3.9%, while the official target of China is 5.5%. All the data that came in today as well, whether it has been about retail sales, factory output, all of those numbers also show a slowdown, is the reason that many of the commodities which actually open on a firmer note in Asia today have now seen a profit taking coming into the markets. The expectation is that you could be looking at weaker demand, not just from Europe and US, but Japan as well, where as well we have seen the third quarter GDP shrink by 0.3%. Markets were anticipating an increase of 0.3%. So this is quite a surprise decline as well. So everywhere that you look, weak economic data and concerns about demand is what is weighing on to crude prices.
All right, Manisha, thanks very much for that. Commodities in focus. Look at Nika. I mean, if we